This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Oil prices extending gains as the U.S. launches new military strikes on Iran over attacks on shipping in the Strait of Hormuz. Washington also revoking its permission for the sale of Iranian oil. Asian stocks set for losses on the renewed Middle East tensions while a sell-off in U.S. chip makers resumes. And New Zealand central bank poised to raise its key interest rate, aiming to head off emerging inflationary pressures.
And I'm Paul Allen in Sydney. Let's take a look at the setup for trading across Asia today. It's going to be a pretty interesting session in the light of recent events around Iran. So let's take a look at Kospi futures off by 2.6% at the moment. That was after a pretty rough day yesterday as well. And Chicago Nikkei futures off by a little bit less there, 1/3% at the moment. The yen still very, very weak. But it wasn't a great session for tech in the United States. The SOX was off about another 4-5% or so. The Nasdaq weaker as well. But the US to a degree spared by the rotation trade. But it's all about the oil price today. So let's check in on that. The US in the past couple of hours launching powerful strikes against Iran, and this was in response to Iran attacking 3 ships in the Strait of Hormuz in the past 24 hours, a violation of the ceasefire, the US says. Iran, for its part, also accusing the US of ceasefire violations, also along with Israeli actions in Lebanon. All in all, that just underscores the fragility of this current agreement. So we've got Brent crude up by about 3% right now, 74.16 a barrel. Spot gold coming off a little bit as well. And here in Australia, we're also expecting a down day. Well, let's get a little bit more on the situation in Iran. The U.S. Central Command saying those new strikes on Iran are a response to attacks on commercial vessels transiting the Strait of Hormuz, and that is a violation of the ceasefire deal. Tehran says Washington's earlier decision to revoke permission for its oil sales violates their memorandum of understanding. So let's get some more on this with our national security reporter, Nick Wadhams in Washington. So, Nick, can you update us on the military response this morning?
Well, so far what we know is that there are strikes that continue to occur in Iran. There have been reports of explosions near the Strait of Hormuz, so it looks like the U.S. is targeting the missile sites and potentially the drone launching sites where Iran has been able to launch attacks on some of these tankers that have been heading through the straits. It does not look like we're returning to the full-scale military conflict that we witnessed after the U.S. and Israel launched that campaign in late February. So you can expect that this is a fairly limited strike. But everything we're hearing at the moment is that those strikes are continuing as we speak.
Yeah, limited but very substantial, and a lot of targets have been confirmed by CENTCOM as well. Is it too much to say that the ceasefire is dead, or where do we head from here? What are markets saying?
Well, it's a great question. I mean, I can't tell you how many times we've written a story that various flare-ups and violence in the Strait have imperiled the ceasefire. So at some point, you sort of have to ask, well, when does the ceasefire move from imperiled to essentially nullified? What we do know, though, is that as long as both sides are accusing each other of violating the ceasefire, that does seem to suggest that they both still think it is in place. And we did hear from a senior U.S. official earlier tonight, essentially saying that negotiations on a longer-term peace agreement do continue or are set to continue in good faith. We were expecting to see those in the next couple of days. So the big thing we'll really be watching for is if those negotiations actually go ahead.
So in the near term, what does this mean for traffic in the Strait of Hormuz? Are we back to gridlock? Nothing?
Well, it's a great question because what you've seen by these Iranian strikes are essentially they're targeting ships that are hitting the southern route of the Strait of Hormuz, so passing nearby Oman, but ships that pass through the northern route, so along the Iranian coast, have been moving through unmolested. So I think what you're seeing there, according to some military experts we've been speaking to, is essentially that Iran wants to route the traffic through the strait via the northern route, close to its shore, and that's seen as being sort of a preparation for what would come next, the levying of tolls and things like that. Question is, if ships decide not to do that, and the U.S. would then argue that that is a violation itself of the ceasefire agreement. So suffice to say, this is not going to be something shippers are going to be pleased about. They're going to be extremely cautious, but we do see and have seen some traffic continue to flow through the strait.
Have we heard from Iran? There has been a statement from Iran. What do they say, and what could we potentially anticipate in terms of a military response?
Well, again, a lot we don't know what in terms of what Iran is going to do. They did say they would launch decisive actions. So in the past, that has included attacks on U.S. allies in the region, like the UAE, Bahrain, and Saudi Arabia. So it's possible you could see Iran try to exert some pressure or leverage on U.S. bases or oil facilities in the region. And then they could also go after more ships in the Strait. I mean, the important thing to remember here is in some ways Iran has a great deal of leverage because it takes so little for them to choke the traffic through the Strait. That puts the U.S. in a very, very vulnerable position because as you're seeing the spike in oil prices. So it's a situation where despite that long military campaign by the U.S. and Israel, Iran is still demonstrating that it has a great deal of leverage, even if it only takes sort of limited actions to respond to U.S. military operations.
Have we heard from any of the mediators yet as well, such as Oman, Pakistan? What might be happening in the background to try and patch this fragile ceasefire back together?
Well, the big question will be whether they continue to go ahead with the negotiations that were meant to achieve that longer-lasting deal. Qatar had been mediating, but there was a Qatari ship that was hit in the last 24 hours. So that's put their role as a mediator under strain. Pakistan has been a venue in the past, and there had been some reports that you might see future negotiations there. But at the moment, we have no indication of a set plan for the next meeting. So it's very difficult to see how the two sides could resolve some of the very technical and thorny issues over Iran's nuclear program and other matters when we're still seeing a lot of tit-for-tat strikes like this. And the window, the 60-day window from that early ceasefire when they promised to get this done is rapidly closing.
Nick Adams, thanks for that update. Bloomberg national security reporter, as we keep our eyes also on other global headlines and, of course, geopolitics front and center. Bloomberg now learning that NATO allies have agreed to at least $50 billion in defense industry deals to show President Trump that Europe is listening to his spending demands. At the NATO summit in Ankara, Secretary General Mark Rutte revealed that the plan includes $12 billion to buy next-generation drones, surveillance planes, and military aircraft. Meanwhile, in a speech at the summit, Ukrainian President Volodymyr Zelensky pressed the alliance to speed up its defense production.
And I urge all of you and all our partners to give it the attention it deserves. And this cannot wait until 2030 or beyond. Europe needs affordable, mass-produced anti-ballistic systems as soon as possible. In fact, today.
India and Indonesia also taking a major step toward closer defense cooperation, signing agreements in Jakarta on missile systems as Prime Minister Modi met with President Prabowo. The two nations also announced a steel joint venture, pact on mining and maritime security, and a pledge to push negotiations on a trade deal. Modi next heads to Australia and New Zealand. French far-right leader Marine Le Pen has been cleared to enter the 2027 presidential race after appeal judges shortened her election ban. But they ordered her to wear an electronic monitoring device while upholding her conviction for misusing public funds. Le Pen says she will launch her campaign soon and lodge an appeal to France's top court. Still to come, we get the setup for the Asia trading day as investors assess renewed Middle East fighting and the latest pullback in U.S. chip stocks. This is Bloomberg. Asian stocks are poised to fall as investors assess renewed Middle East tensions, while concerns over stretched AI valuations weigh on tech shares. Let's bring in Bloomberg MLive Strategies' Mark Cranfield. Mark, really all of the themes that have led to that boom across Asia seem to be missing, at least this morning, especially with the oil spike that's not going to bode well with a lot of oil-dependent economies across here in the region.
Yeah, well, the big problem here is it's starting to push up global yields again, particularly in the United States. We see the 30-year yield back above that 5% mark for the first time since mid-May, and that's dragging global yields up with it. That's obviously putting central banks back in the spotlight because they may need to rethink of their policies going forward, whether they need to increase interest rates. And of course, particularly in the case of Asia, most of them have been very slow to do that, and they're hesitant because of the effect it'll have on the currencies and their equity markets as well. So they're almost between a rock and a hard place here. If inflation starts to become an issue again, they may be forced to come into response, which they don't really want to do. So they'd like to sit back and wait as long as they possibly can. And they'll certainly be watching what the Federal Reserve have to do. The longer the Federal Reserve delays raising interest rates, the better it will be for Asian countries. But we're getting to the point where it's going to be very hard to ignore the inflationary stories that we're hearing around the place. And that impulse is going to feed through to cross asset markets, and traders will be starting to get very nervous. It's not a done deal yet that everybody will need to raise interest rates, but the bar is shifting that way, and we can expect to hear more hawkish comments coming out from across the region, even though the Fed hasn't moved yet. But clearly there's a danger that their next move is going to be something in that direction.
Yeah, it's a close call for the RBNZ today as well, right? But when it comes to broader Asian equities as well, the fact that we saw another tech sell-off in the U.S. session will not bode well. Samsung's record profit really not managing to save the memory trade at this point. At least, is there some silver lining in the fact that we saw the rotation in the U.S. session towards laggards?
Yeah, I mean, it will help Asia to some extent. And you've got to think that places like China and Hong Kong markets, which have fallen behind the leaders in Korea and Japan and Taiwan, people will probably be looking more closely at that. That's certainly a positive thing. But overall, when you think of the upswing that we've had for the leading markets, there's still the risk that there's plenty of downside, because positioning clearly is huge. People have been heavily involved in those trades, chasing the moves in the chip makers. And so there's still a lot of money potentially to come out of the market here. We are at the start of the US earnings season, though, so we could get some decent results coming out from the big American names, and that will help to stabilize things. But we're in a very nervous period. You can tell that people are not comfortable with the exposure they have to AI themes at the moment, compared to where they were, say, a month ago, where everything seemed to be plain sailing. There's much more questions coming in here, whether the amount of spending in these data centers is really going to be justified by the returns that are going to come further down the road. People are being a bit more defensive here. And so it doesn't take much. You can see the way that the Kospi is swinging around. We're getting much more occurrences now of big downside moves rather than upside moves. It's a big change. If you compare the first 5 months of the year, there was much more likely that the Kospi would have 5% up days than down days. That has changed since the beginning of June, and we're now getting more occurrences of down days than up days. And so the mood is shifting, and it needs something positive to come out to reestablish the faith that investors had previously. Maybe that will be the US earnings season. Maybe everyone will feel much better once they see a couple of big names produce good results.
At least for now, we saw SpaceX even stumbling in its NASDAQ 100 debut. Will this mean potentially more volatility on this mechanical buying that we're expecting with these fast entries into the NASDAQ or Russell?
People will be looking very closely at what retail has to do here. It was widely thought that the retail participation in SpaceX was huge. Institutions definitely are involved, but it's a favorite of the retail crowd. They've been very prevalent in certain names. They were in Micron, they were in Tesla. Now they seem to have migrated to SpaceX. So, and they tend to be a little bit more fickle. They churn their positions around a lot more quickly. So that kind of volatility, some of it we've seen in the ETFs as well. Traders are getting used to the fact that Korean ETFs swing around even more dramatically than the share prices of the stock. So once retail investors are involved to a very large degree, it increases the potential for day-to-day volatility. So that will certainly be something which is overhanging the market. And once the concerns about the valuations come into play in terms of SpaceX. Who knows where the downside is? Because if you look at where analysts are, they're all over the map. There's no agreement on what is the true valuation. Wall Street has got valuations ranging from low 100 numbers up to like $1,000. The range is just crazy, and no one seems to be able to agree where SpaceX is really valued.
Yeah, I think Morningstar had a $62 target, and then we saw like up to 800 or something. It's insane. Mark Cranfield, Bloomberg and Life Strategies there with the latest on the setup for the market opens across Asia. And of course, as Mark was talking about, we're seeing that volatility play out in this market, right? Especially with Samsung's record profit failing to save that memory trade, and perhaps one of the biggest tests when it comes to AI demand and what we can expect in that sector. We did have, of course, a little bit of support when it came to the South Korean won, because we also have the SK listing ADRs listing in the U.S., and that potentially giving a little bit more upside when it comes to the Korean currency. But you can see right now futures trading to the downside. Of course, not surprising, Paul, given the downside that we saw on Wall Street with the Philadelphia Semiconductor Index again losing ground.
Yeah, meantime, Chinese authorities have reportedly held meetings with top tech companies over the past month about potentially restricting overseas access to their most advanced AI models. Let's get to our China correspondent, Minmin Lo, for more. So, Minmin, tell us about this report of potential curbs that are under consideration.
Yes, this is according to what Reuters is reporting. The Chinese Commerce Ministry and the NDRC, which is the economic planner, has been meeting with some of these top tech firms, including Alibaba, Zhipu, as well as ByteDance, for example. And their discussion centers around considerations to place restrictions on overseas access to these top AI models. Now, if that sounds familiar, it's because the U.S. Commerce Department also ordered Anthropic to do the same thing a few weeks ago, right? Some of those restrictions on the Mythos and the Fable 5 AI models have been lifted, but it looks like the Chinese government is taking a leaf out of the US playbook. And the scope of those restrictions are still under discussion, but according to Reuters, the government is looking at potentially restricting the overseas access of these models, even the models that are not yet released, including both open source and closed source ones. And they're also looking at making the theft of these proprietary AI technology an offense under the national security system. They're also considering placing limits on who can invest or fund these domestic AI endeavors. Now, in terms of the impact, many of these Chinese AI companies obviously have made very strong inroads globally because of how affordable the AI models are and how capable they are. So if this comes through, it will be quite a hit for some of these AI companies, and it will have ripple effects across the AI industry because business costs will likely increase for many companies.
Yeah, it could be an interesting day for some of those Chinese AI names. I mean, Zhipu, for example, 25 million shares going to be released from post-IPO lockup today. But we also have reports that Zhipu and DeepSeek could be making their own chips. What do we know about this?
Yeah, so this is, again, according to Reuters reporting, DeepSeek reportedly looking to make its own chips. And according to the information, Zhipu is looking at the same thing as well. Now, there are a few catalysts for this. For DeepSeek, it's about reducing reliance on the suppliers like NVIDIA and Huawei. And for Zhipu, it's also because it has seen a surge in demand in its latest large language model, which saw a 27% surge in demand just in the first week of the launch. And the third factor is the U.S. export control, right, which restricts access to some of these top chips from NVIDIA. So it's also part of the domestic push here for these companies, which are now joining the likes of Baidu, Alibaba, ByteDance to work on building their own inference chips. Now, it's also because some of these companies are maturing and they are no longer building the foundational AI model, so they no longer need those general purpose GPUs, and they're shifting to inference chips, which are much cheaper, much more efficient, so it can lower the cost of their business. But it's a long-term process, sometimes requiring at least 2 years to really speak to designers, design the chips, and then test it out. Sometimes you have to adjust your software stack to integrate with the hardware. And Zhipu is just at the start of this process. DeepSeek has started that process a year ago. And the implication here is for companies like Huawei and for NVIDIA, NVIDIA, they are going to see the hit, right? Especially as more companies in China transitions away from using these foundational GPUs as a foundational layer of their compute. Some analysts are saying for NVIDIA, it will become structurally harder to recover the Chinese market, regardless of whether or not those U.S. export controls loosens.
All right, Bloomberg's China correspondent Min Min Lo there. And we're going to be live at the Hong Kong Stock Exchange later on today, speaking exclusively to the CEO of autonomous driving firm Momenta as the stock makes its trading debut after a $750 million IPO. That's coming up on the China show. We have more ahead on the Asia trade, though. This is Bloomberg. Most economists surveyed by Bloomberg expect New Zealand's central bank will raise its key interest rate today as it aims to head off emerging inflationary pressures. Traders are also pricing about a 70% chance of a hike. Let's get to Wellington now and our reporter Tracy with us. Tracy, thanks for joining us. Look, the RBNZ's been on hold now since November. Why today? What are the arguments for more tightening?
Well, Paul, at 2.25%, the official cash rate is certainly at its stimulatory levels, well below neutral, which most economists estimate to be 3 to 3.25%. So there's a general widespread belief that the Reserve Bank needs to get the cash rate back towards that neutral. The economy showed signs of life ahead of the Iran crisis developing. It's been sat back a little bit when the high fuel prices hit spending, but there's signs now that the economy may pick up in the second half, so now is a good time to start removing that stimulus.
So we're not going to get any fresh economic or rate projections today, but we will have a press conference from the Governor, Anna Bremen. What is she likely to say? What are markets going to be listening for there?
Well, I'll certainly be listening for suggestions that, as I just said, that the stimulus is going to be removed. They'll be looking for signs that the Reserve Bank is slightly less worried about inflation in the medium term. In May, when we did get a set of projections, the central bank saw inflation going as high as 4.3% later this year, remembering it's targeting 1 to 3%. Most economists have now adjusted their views down, and while we won't get specific forecasts, as you say, the market will be looking for the governor to suggest that the worst of inflation is probably behind us, and we'll get back to that 2% sort of midpoint next year, which is the Reserve Bank's requirement.
And breaking news reporter Tracy Withers there with what to expect from the RBNZ. Today we'll be watching the Kiwi dollar as well as we saw some downside pressure with a revival of the U.S. dollar. Over in South Korea, we're also watching the current account balance numbers for May. The surplus widening to $38.6 billion. The goods trade surplus also widening to $37.9 billion. Of course, not surprising given that we have seen those export numbers from South Korea soar. Memory chips being shipped out of the country. Also investments coming back to South Korea with SK Hynix ADR flows this week. We have more coming up on how inflation expectations and concerns across Asia will play out in bond markets. Natixis shares their outlook in about an hour from now. More ahead on the Asia trade. This is Bloomberg. Paul, we're seeing the geopolitical risk premium narrative return to the markets with the U.S. now launching airstrikes on Iran and also really rescinding that waiver when it came to the sale of oil from Iran. And of course, this was a key point that we're watching, whether or not the Strait of Hormuz would have freedom of navigation and what that would mean when it comes to the interim peace deal. We're now hearing that ships were attacked in and around the Strait of Hormuz. In In the meantime, you can see oil prices reacting, both Brent and WTI gaining ground above that $70 per barrel level. It had already sunk about 30% in the second quarter, but we're now seeing this risk premium returning back to the markets. But we'll be watching European gas very closely because that might be the bigger immediate shock. We have seen futures jump more than 9%.
Yeah, we were already setting up for perhaps somewhat of a rough day, Shery, even before those US strikes on Iran, which really did set the cat amongst the pigeons. So let's take a look at how some of these risk assets are tracking at the moment. We've got Nikkei futures weaker by 1.3%. We're going to be a little bit softer here at the open here in Australia as well, of 0.5%. We'll keep an eye on Telstra also, as if we needed anything else. There was a major telecommunications outage in Australia today, which is also affecting trains and emergency numbers as well, but the broader index expected to open softer. Glimmer of hope there on the left of the screen, though. S&P futures pointing a little higher, as are NASDAQ futures, but we've seen Treasury futures falling after those US strikes on Iran did push that oil price higher. Not a great deal of change, though, for the dollar. All right, well, let's get more on the latest US strikes on Iran. Joining us now is Jessica Genauer, Associate Professor in International Relations at the University of New South Wales. She's also Academic Director of their Public Policy Institute. Jessica, thanks so much for your time today, and I just want to get us started by asking for your initial analysis of the events of the past couple of hours. Is this a crippling blow to the ceasefire, or just the sort of bump in the road that you might anticipate?
So it actually could go either way from here, and we're not sure yet which pathway we're going to go down, but it's certainly very precarious. So since this MOU came into effect on the 17th of June, we have seen a lot of tensions ongoing around the Strait of Hormuz. And that's basically because the Iranian regime really wants to fully control shipping in and out of the Strait of Hormuz, and they would like that shipping to go along a specific route that really hugs the Iranian coastline so that they can have control over shipping and then also be able to charge a kind of a service fee for ships going in and out of the strait. Now, there's another route that ships have been taking which hugs the Omani coast. The Iranian regime objects to that, and that's where we've seen Iran striking vessels that have been taking that alternate route that is endorsed by the US. So what we're actually seeing is that even though we had this MOU, because the MOU didn't really deal with the kind of core tensions that were driving this war between the US and Iran, that we're actually just seeing a continuation of those tensions being played out in the way that this contest is continuing around which route ships should be taking in and out of the Strait of Hormuz. And I think it still remains to be seen, is this more or less a sort of one-off tit for tat, or are we actually going to see a little bit of a breaking point with Trump's own sort of frustrations, even though he clearly wants the ceasefire to hold, but Iran isn't exactly cooperating with what he wants. So will we see, again, a kind of an escalation on the US side as this progresses?
In terms of those core tensions you mentioned, each side does accuse the other of violations. You know, the US, of course, accusing Iran of attacking ships, Iran unhappy about the cancellation of those oil waivers, also Israel's actions in Lebanon as well. So which side's got the stronger case here, or do they both have a strong case?
So they both have different strengths and weaknesses. So probably Trump's biggest weakness in some ways is his political resolve. So Trump clearly would like the US to be able to withdraw now from the war with Iran. He'd like to move on in terms of the US domestic agenda. So this means that Trump almost unilaterally withdrew the US from this war. I mean, the US didn't give up. I mean, the US gave up a lot in terms of that MOU. The Iranian regime got a lot in terms of their demands and really didn't give up anything. For example, on the nuclear issue, they really didn't make any commitments around that. So Trump's biggest weakness, I think, is the fact that he has very, very low political resolve to stay in this war. But the strength of the US is always the fact that the US does have overwhelming military capability if they want to choose to use it. Now, there's a lot of costs involved in using it. Trump has already seen that escalating with the Iranian regime is only going to get so far, and it's probably not going to lead to the outcome that he wants. But the US still does have that military capability if they want to bring it back into play. On the Iranian side, probably their biggest strength is their very high political resolve. So the Iranian regime absolutely sees this not only as a fight for their survival, but it's also a fight for their identity, which in some ways, is just as important for that Iranian regime. So they're absolutely determined to show that they are strong, that they're standing up to the US, and that they will not capitulate to the US in any way. And they're really willing to bear massive costs in order to do that. Like, we could say logically, okay, the sanctions were lifted on Iran, now they should just cooperate with the US, play nicely, get those oil revenues flowing in and out. Doesn't really matter which route chips are taking through the Strait of Hormuz. But no, the Iranian regime are really determined also to look strong and to look in control in a way that I think Trump has probably underestimated. And they have a lot of resolve to double down on that position. So that's probably the key strength at the moment for the Iranian regime.
Yeah, and we're just hearing on Axios Newswires that President Trump did approve the Iran strike plan today. He ordered that while in Turkey for the NATO summit as well. There is also the question of Iran's nuclear program. What are the challenges and the technical issues around getting that resolved? And does that help explain some of the political motivations of the Iranian regime just to keep on grinding this out and exact monetary and political costs from the US?
So I think, interestingly, on the nuclear issue, as I mentioned earlier, so as part of this MOU, the Iranian regime really didn't have to commit anything on the nuclear issue. All as they committed was to keep talking to the US and to try to get some kind of agreement within 60 days. Now, it was relatively obvious that it's very unlikely that within 60 days, the US and Iran are going to manage to reach any kind of agreement on the nuclear issue where they're sitting really far apart. So we could say, okay, is this Iran trying to play for time and in some ways trying to undermine or spoil that agreement so that they never have to reach sort of, a compromise or to give anything up on the nuclear issue? But I don't think that that's probably front of mind for the Iranians because they really got so much in that MOU without committing anything on the nuclear point. So I think that they would take that as a sign that, within 60 days, they could easily not reach agreement on anything to do with the nuclear issue, and basically the US would be willing to keep negotiating. So I think more the key issue for the Iranian regime here is that they absolutely do want to control shipping in and out of the Strait of Hormuz. They do want to be able to charge a service fee. They don't want the US anywhere near the Strait of Hormuz or setting up sort of an alternate shipping route for cargo going in and out. And I think for the Iranian regime, this is more about also leaders domestically within Iran, because as a result of this war, the regime has shifted even further to the kind of ideological hard right camp. This is also about players within Iran, leaders within Iran wanting to show their credentials of how they are able to stand up to the US, to push back against the US, and to make sure that the US completely leaves the Strait of Hormuz and has nothing to do with Iran in future. So there's kind of a domestic play going on there, which is probably less about nuclear, more about showing that they can really get that full control over Strait of Hormuz. And again, remains to be seen. It'll really depend on what Trump decides to do and whether he decides to double down on military action and going back in a bigger sort of military way for the US, whether or not that will kind of succeed for Iran.
Jessica, thanks so much for your time today. That is Jessica Genauer, Public Policy Institute Academic Director and Associate Professor in International Relations at the University of New South Wales. Let's take a look at how assets are performing in the light of this news. Not a great deal of change for the dollar, perhaps a little bit stronger, but we have had Treasury futures falling after those US strikes against Iran. That's been pushing oil higher, understandably. That's reigniting inflation concerns as well. S&P futures were very modest positive a moment ago, now just tipping a little bit to the downside just by 5 points there. So the market's still trying to figure out in a way whether this is a critical blow to the ceasefire or, just a hiccup? We have more ahead on the Asia trade. This is Bloomberg. More stories that we're tracking on the corporate front. Bloomberg's been told the peak demand for Amazon's latest $25 billion bond offering reached $62 billion. That's about half the orders it attracted for an offering back in March, a potential signal of investor fatigue around AI-linked debt sales. This latest deal brings Amazon's total bond issuance over the past year to more than $100 billion. SpaceX AI and Cursor reportedly plan to launch their first jointly developed AI model as soon as Wednesday. Tech news outlet The Information says the model is expected to process information quickly enough to compete with products from Anthropic and OpenAI. It also reports the company's pushed back plans to launch the new model earlier this week in order to improve its efficiency. Shery.
Yeah, take a look at SpaceX as well, Paul, given that we have seen its debut in the Nasdaq 100, and it wasn't great. I mean, we saw it stumble. We're talking about closing at the lowest level since its IPO, down from a peak also of above $200. We continue to watch the index mechanics becoming part also of the AI trade. Of course, we have seen Nasdaq and Russell fast entry rules being changed for SpaceX. Analyst coverage also has been pretty extreme for this company. We're talking about the likes of Raymond James, for example. They have a strong buy, $800 target. And then you have on the other side of the coin, you have Morningstar with a sell rating and $62 target. Let's actually talk about the broader space industry, because our next guest is CFO Rocket Lab, which provides launch services, spacecraft design, launch services, flight software for clients, including the U.S. Space Force and the Japanese Space Agency. Let's discuss the company's ambitions and growth outlook with Adam Spice, CFO of Rocket Lab, who joins me here in Tokyo. And it's great to have you in the city.
Yeah, thanks for having me.
So you came at a time when we have this Nasdaq 100 inclusion of SpaceX in a company that more and more people are seeing just as another AI story. What does that do to the broader space industry when are you seeing less as an airspace firm, more as a platform infrastructure firm?
Look, I think the SpaceX IPO has been a seismic event for the entire space industry. Although I think, to your point, I think it's looking less and less like a pure space company and more like a broader AI and space-based telecom company. In some ways we're similar because we both provide launch services. We're a bit different because we sell space services like hardware to build satellites to other people. So we're more of a picks and shovels play to the broader space ecosystem opportunity versus, SpaceX is very, very straight and kind of a dedicated markets that they're playing to, and they're very dedicated on doing that versus supporting the entire industry.
We're seeing greater rotation even within the tech sector these days. Are you going to see more discrimination in how investors see space firms, which before perhaps were treated more as a bunch?
Yeah, well, one thing I've seen in the last probably 180 days is a tremendous amount of attention from the buy side, just trying to get smarter on space in general. So when you've got so much market cap now coming in one particular name, people were kind of, I would say, playing around the periphery in space, and now they have no choice but to put a lot of smart people on it and really understand where the opportunities are. As a result of that, you're starting to get a real, I think, bifurcation between what are the quality space names and which ones are kind of loosely associated with space, but trying to kind of be part of that wave that's getting swept up in the excitement.
What does the fact that you're buying space satellite provider Iridium mean for what Rocket Lab becomes from here?
Yeah, I think the Iridium acquisition is transformational for us. It really kind of completes the end-to-end space story where we started off providing launch services on a small rocket called Electron. And now we're the world's leading provider of small dedicated launch. And in fact, we have a lot of customer concentration here in Asia, particularly in Japan, with that vehicle. And then we moved into building spacecraft. So we launched spacecraft, we can build spacecraft, and now we can actually offer services in space, which is by far the largest part of the market. So for us, it's really kind of going from kind of soup to nuts, right? All the way from the very basics to all the way to the end, where the most value creation is usually seen is on the application side in the largest part of the market.
Is that what's needed right now to succeed almost in any business? I mean, we've been talking about SpaceX and how they own everything. It's not just when it comes to space. We're also talking about AI infrastructure. Why go in that direction?
Well, we believe that the truly successful space companies of the future are end-to-end ones. I think it's going to be very difficult to have a real thriving business if you're just launch or just satellites or just an AI company. You really have to have everything to be able to provide the full service and be cost effective. If you kind of look at the success that Starlink has been in the market, it's largely been due to the fact that SpaceX is so vertically integrated. They're the world's largest satellite manufacturer, the world's most prolific launcher. So it shouldn't be a surprise to too many people that their space-based applications are doing better than most, if not everybody else's.
Does that also help in providing more launch capacity around the world?
Well, I think that's the challenge right now. Is I think there's so much internal demand, it seems, within SpaceX that maybe the rest of the market is starting to get a little bit squeezed, which is important. Why we're there to provide small dedicated launch with Electron, and we're bringing Neutron to market, which is a real true competitor to the Falcon 9 in the medium lift launch market. So I think the timing is right for us to bring more capacity to the market, but I would say that SpaceX's success doesn't really necessarily mean a lot of incremental access to other people as far as getting to space.
Tell us a little bit more about Neutron and Electron as well. When it comes to the deals that you have with your clients, how long-term are they, especially if you're talking about capacity perhaps not being abundant out there?
I would say that if you look back a few years ago, we were having smaller, like 1 or 2, 3 launch contract deals, and now we're signing up to 10 launches per customer, and they spread out over several years. So I think and I think now what we're seeing is there's a lot more anxiety about the access to launch over the next several years. So I think what you're seeing is customers are leaning forward, and they're wanting to make longer-term commitments to secure that access to space, because you can't really do much if you can't get to space.
What exactly are you doing here in Japan with your cooperation with JAXA as well and others?
Well, we've got very deep customer relationships here in Japan. In fact, some of our largest customers are here. I think Synspective may be our largest single commercial customer. We signed over about 20 launches with them. IQPS is another large and meaningful customer for us in Japan. Of course, JAXA was a very meaningful milestone for us to be able to get that level of engagement with an organization like JAXA.
What are you seeing in terms of Japan's commercial space industry? Because we have seen, of course, a lot of government support and perhaps a refocus into the space industry these days, especially as we continue to get this sort of competitive race going on across Asia. Can Japan lead in this sector?
Well, I think one of the most important things about space is heritage is very, very important, and it takes a long time to build heritage. So I think from what I can see, it seems like Japan is making steady strides, but this is not a race that gets run in a few minutes. I mean, this takes years to build heritage. So it takes a long-term commitment. From what I've seen, it seems like the Japanese companies and the people that we partner with are very committed to the market, but it's going to take that. This is a decades-long investment. This is not something you can just pop into and be successful in a couple of years.
Who's winning across Asia?
Well, I think if you look at some of the customers that we're partnering with, I think Synspective is doing incredibly well, IQPS as well. So those are two very, I'd say, innovative, call it Earth observation companies that are showing the rest of the world what it really means to have these kind of platforms and what value they can bring through that imagery. So I think those are two great examples of successful Japanese space companies.
And bright spots for Rocket Labs right now?
Oh, I think the bright spot for us is our growth has been phenomenal. So we're growing very, very quickly. Our margins are expanding on our products, particularly on the Electron side of the house. We're super excited about Neutron. Again, that brings a much needed capacity to the market because the market's really been starved for that key medium lift launch capacity. So I think people are going to start to breathe a little bit easier when they see the first launch of Neutron towards the end of the year.
Adam Spice, good to have you with us, CFO at Rocket Lab. And of course, you can get more on those big stories around tech. Bloomberg Video Hub is a site that you should go to. We do have Bloomberg Tech Asia there, also other shows, bloomberg.com/videos. This is Bloomberg.
The picks and shovels of the AI trade are back in focus with the SOX index now 15% below recent highs. Rotation is keeping damage to US equities pretty muted. Asia, though, might see a bit more pressure. Oil's jump on renewed Iran strikes is also adding to macro concerns. Let's get some more on all of this with markets reporter Anthony Stevens. So, Anthony, what leads do we have from the US tech trade overnight for Asian trading?
Yeah, rotation was a really big deal in the U.S. on multiple levels. So first, we saw factor rotation. Momentum continues to struggle, and quality and value are re-emerging. And what does that actually mean on a sector basis? It means that the U.S. saw sectors like the hyperscalers, software, banks, and pharma doing quite well, while the semiconductor index was off sharply again. Now, Asia doesn't really benefit from that rotation. Sure, the Japan banks have been doing really well. Japan industrials and pharma are decent-sized sectors, but nowhere near the weight of tech in the MSCI Asia Pacific Index. So you can obviously see the leads into Asian trading being quite weak. The Korean market in particular, that market got stopped for limit down yesterday, and that limit down level from yesterday will be very interesting to watch from a technical perspective. The Kospi is very tentative on the 50-day moving average, and it's looking like it's going to break a medium-term kind of support if these futures leads hold. So what that means for Asia is this tech trade where we move away from the picks and shovels to the US hyperscalers and the people spending on AI. That will determine the fate of the MSCI Asia Pacific. And for now, that narrative looks like it's a negative one.
Anthony, of course, we do have geopolitical risk again. I don't necessarily want to ask, does oil matter? Because who knows, right? That peace treaty, what's going to happen with Iran and the U.S.? And at the same time, though, inflation, though, back in focus. Is that how oil starts mattering again, just because of inflation expectations in a week that you have so many treasury auctions, JGB auctions as well?
Spot on. It's more that positioning is really clean into this latest pop in oil. Oil volatility is very low. FX volatility is very low. Equity volatility at a headline level is very low. Treasury volatility is very low. So people are not really hedged for any worsening of this situation from this point. And that's why we saw that big squeeze in the oil price late on US trading, which is kind of carrying over today. Still, inflation expectations are relatively well anchored after the comments from Wash and Waller, but that is definitely something to watch. You should keep an eye on US short-run inflation swaps 1 year and 5 years to see if there's any reaction to the recent moves in oil. In Asia, though, the reaction function is much simpler. We are huge energy importers, and people will probably look at this as an increase in overall risk, especially coming alongside some of the semiconductor stress. So we might see some continued pressure on EMFX, and that could drive the dollar higher. The dollar has been stuck at the top end of the range because of Wash and Waller, but now as the oil crisis kind of escalates, maybe the dollar safe haven status returns.
Anthony Stevens, our Bloomberg Markets reporter, with the latest on what to watch in markets across Asia. Of course, we're also watching what's happening with the May current account balance here in Japan, because those oil exports having an impact. We're talking about the surplus narrowing to 3.97 trillion yen. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens with a little bit of caution across sentiment right now. Of course, we had that big sell-off in tech again in the overnight session, with the Philadelphia Semiconductor Index losing more than 4%. We had a little bit of rotation towards the S&P 500, towards the laggards, but it's still that fear around artificial intelligence and perhaps the how stretched valuations are. On the other hand, we also have geopolitical risk premium coming back into the markets. We're talking about Iran, the U.S. launching airstrikes on Iran. We have seen attacks on ships in and around the Strait of Hormuz. So we'll be watching oil prices at the open when Brent starts trading. But we have seen that upside take WTI also above $70 a barrel. But take a look at how Japan is coming online, because, of course, this is a market very sensitive to oil prices, given how dependent it is on the Middle East. And we are now seeing that pressure again on the Japanese yen. Not that it needs more pressure against the U.S. dollar at this this point, but we're talking about that 162 level back again. We have extreme short positioning, leverage traders increasing. We're talking about the most bearish since 2007. Do watch out for JGBs, a very interesting market because we have seen it actually rallying. We had a strong 30-year auction, the strongest demand ratio since 2019, but then you also have the fiscal risks here in Japan that everybody's watching. You have the complication around what's happening with, of course, inflation being back in the spotlight with oil prices rising, and we have those gains on JGBs capped. You can see Brent crude opening right now above $76 a barrel. All of this after, of course, we continue to see the tensions around Iran and the U.S. continuing those airstrikes. We'll see what happens to the peace deal, but it's also about tech. Take a look at what tech is doing right now, especially in South Korea, because it was all about Samsung failing to revive the memory trade, that momentum that we've seen in the tech sector, right? I mean, even with record profit announcements, the bar was so high. So we're seeing Samsung continuing to lose ground. Put it into context, though, because we're talking about a stock that rallied, what, more than 150% up to this week or so. So we're still in that consolidation phase. We did have a little bit more upside when it came to the Korean won because we had SK's U.S. listing, those ADR flows, giving a little bit of a boost to the Korean won. Not much, though. Right now, 15.21, and not surprising downside on the Kospi, given, of course, how heavily weighted it is towards these two stocks. Let's bring in Mark Matthews, head of Asia Research at Julius Baer. Everything that I've said until now, Mark, not necessarily positive when it comes to the Asian market. What is top of mind for you on a day like today?
What is top of mind for me is this unwind in the semi stocks. Frankly, I've been waiting for it for a long time, and we don't like to call tops. We like to see the market put in a top. But my hunch is that it's putting in a top for these names now. And actually, Bloomberg was the first to report, if memory serves me right, on July 1st, that Meta was developing a new department that they called Meta Compute to basically rent out compute to developers. And it was the first time I read an article about rumors that I'd been hearing that these hyperscalers have actually accumulated too much inventory of GPU and chips. And since then, there have been more anecdotes coming out to reinforce this message. So that, combined with the fact that these prices just got so big for the semi-stocks, and once again, I rely on anecdotes, but over half of the entire Korean stock market is just two stocks. And Taiwan and South Korea together are the two largest countries in the emerging market index, but they're only 5% and 10% of the Chinese economy, respectively. Anyway, I think that's the most important thing.
I think it's interesting to see the Mag 7 lagging for a few weeks, and then you have this momentum back to the hyperscalers, right? But to your point on those semiconductor hardware makers, especially from South Korea, on a week like this, where you have Samsung's record profit and SK's U.S. listing, what signal does it send to the broader markets of where this sector within tech is going? Are we going to see more rotation even inside this sector?
I believe so. I believe that precisely to your point, the Mag 7 and some other big technology stocks like the Chinese, what they call old technology in China now, Tencent, Alibaba, JD, etc. There was a lot of shorting going on in those names to fund semiconductors. It's very clear if you look at the leveraged ETFs under management, the assets under management have really just exploded in the US and Asia. In fact, 2 weeks ago, the SK Hynix 2x levered ETF that's listed in Hong Kong briefly surpassed the tracker fund in size. To me, that was a very telling sign that this was an overbought sector, because Hong Kong's the 4th largest stock market in the world. And the tracker fund is absolutely enormous. It's the legacy of the Hong Kong Monetary Authority's massive intervention in the stock market during the Asian crisis. So I believe there will be rotation into the Mag 7 and the so-called old technology stocks in Hong Kong.
With the concerns that you have around hardware and around names in South Korea like SK Hynix, what are the implications for the broader, say, South Korea market that it even has now single stock leverage ETFs causing more volatility, even the Korean won moving because of SK Hynix ADR flows?
I would have thought it's a negative thing because if you exclude SK Hynix and Samsung Electronics, the Kospi is still up over 30% so far this year, which is, I think, only Taiwan among all the markets in the world has done better than Kospi X, SK Hynix, and Samsung Electronics. So what I think that's telling you is a lot of people thought, oh, I want to own Korea, I'll buy the Korean ETF, the country ETF. And I would think most of those people, I hope for their sake, have some profits that, you know, if they bought it a month or two ago, they'd be probably looking to exit based on the recent news that I just cited to you about potential overcapacity.
Mark, and of course, we have another added layer in today's session, which is oil prices spiking. The U.S. dollar also seeing a spike because of safe haven demand. How consequential will this be in the long term when we don't necessarily know where the Iran deal is going?
No, that's the problem. We don't know where it's going, and so it really just depends on a future that we can't predict. But I'll just tell you that in 2011, 2012, 2013, 2014, those 4 years, the oil price averaged $95 a barrel. And if you adjust for inflation, it was actually $150 a barrel in today's money. And in those 4 years, the S&P returned 80%. And I'm telling you that because there are many countries in the world that will be hurt by a high oil price, but the United States is not one of them, I don't think. I think the pain point is I would guess, about $150 for the stock market, and we're at 72 today for the oil price. Now, the other thing that was happening back then in those 4 years was a bull market in technology. Back then it was about smartphones and tablets and e-commerce and social media. Today it's artificial intelligence, so I'm concerned, but I'm not that concerned because I think the oil price has to be a heck of a lot higher for it to make the market roll over.
Yeah, especially when we continue to talk about that glut potentially just coming back in full force, right? Mark Matthews, good to have you with us, head of Asia research at Julius Baer. And as we were talking about those oil prices now at around 70 when it comes to WTI, Brent as well. Take a look at some of those oil names trading in the Asia session. Interestingly, we are, of course, seeing some move in the Australian session. The ASX 200 is down at the moment, but we're seeing the energy sector topping the gains today, gaining more than 3.5%, not surprising. And you can see the names of Santos, Woodside also gaining ground. And of course, as we were discussing, is also about tech. We're watching those names in South Korea and Japan as well, especially given that record profit from Samsung failed to save the memory trade. We had seen that downside in SK Hynix, Advantest, also Tokyo Electron equipment makers are down. Kioxia are recouping some of those losses that we saw earlier in the week. This is Bloomberg. Take a look at how oil prices are trading at the moment. Of course, we have renewed tensions around Iran. We have seen oil sinking 30% in the second quarter, and we had actually passed to glut worries when it came to this market, but the geopolitical risk premium has returned. And of course, we have even seen the safe haven demand for the Bloomberg dollar index as well gaining ground, and we're seeing Asian currencies on the other side losing ground. The European gas futures have seen the most immediate reaction, that shock when it comes to Europe European gas futures jumping more than 9% at one point in the previous session with concerns about these shipping attacks. And now we're hearing from the U.S. Central Command saying that new strikes on Iran are a response to those attacks on commercial vessels transiting the Strait of Hormuz, which violate their ceasefire deal. Tehran says Washington's earlier decision to revoke permission for its oil sales violated their MOU. Let's get more with Bloomberg editor John Herskovitz. John, he said, she said kind of situation right now, but break it down for us. Where are we at?
Sure. If you look at what happened at the end of June when there were the tit-for-tat attacks between the U.S. and Iran, those resolved themselves, talks resumed. But this one's a little bit different because the U.S. is invoking one of the key provisions of the Memorandum of Understanding, allowing Iran to sell its oil on the market so it can get some cash. So the U.S. sees the behavior of Iran as violating the MOU. It's eliminating one of the incentives for Iran to go ahead with the deal. But we don't know if this has derailed talks or not. Intermediary Qatar has said that they're looking to resume talks this week. They were on hold for the funeral of the supreme leader who was killed at the first day of the strikes. So whether the talks could resume as soon as this week, we're not sure about that. But we're seeing an escalation in that one of the key provisions of the MOU is being invoked by the U.S. to hurt Iran financially.
I mean, the U.S. has tried to hurt Iran financially for years, right? Yeah. Even before the Iran war started, all sorts of sanctions to stop it from developing their nuclear weapons. Yeah. But so how much would withdrawing this waiver actually do to hurt Iran?
Yeah, it's interesting because last week Bloomberg put out a report about Iran having difficulty selling its oil. There are about 20 million barrels at sea with no clear destination, no buyer. The main buyers in China and India are kind of balking because of risk, financing. So yeah, Iran has had trouble selling its oil, getting the immediate gains to its coffers. And I think it's looking at the long-term implications. Controlling the Strait of Hormuz is of greater importance financially than the immediate sale of its oil, which has been rather difficult for Iran to do.
Yeah, because before the Iran war, they never could charge any fees. I mean, there was freedom of navigation. So what do we know at this point on where those fees go?
Yeah, exactly. It's like for Iran, I think they're trying to divide the strait into three parts. The closest to Oman is the one that Iran is the most worried about because the U.S. can aid in the guidance of ships. Middle Channel has mines. Iran wants shipping to go near its shores so it can control what's going through, get the financing that it sees as a reward for the control of the strait. So, and it's I think the long term for Iran is what's being invoked here, as opposed to the short-term losses from the potential sale of its oil.
Bloomberg editor John Herskovitz here with the latest on those very confusing tensions around the war in Iran and what's going to happen to that peace deal as well. But take a look at some of the other geopolitical stories that we're following, because Bloomberg has also learned that NATO allies have agreed to at least $50 billion in defense industry deals to show President Trump that Europe is listening to his spending demands. At the NATO summit in Ankara, Secretary General Mark Rutte revealed that the plan includes $12 billion to buy next-generation drones, surveillance planes, and military aircraft. Meanwhile, in a speech at the summit, Ukrainian President Volodymyr Zelensky pressed the alliance to speed up its defense production.
And I urge all of you and all our partners to give it the attention it deserves. And this cannot wait until 2030 or beyond. Europe needs affordable, mass-produced anti-ballistic systems as soon as possible. In fact, today.
India and Indonesia have taken a major step toward closer defense cooperation as well, signing agreements in Jakarta on missile systems as Prime Minister Modi met with President Prabowo. The two nations also announced a steel joint venture, pacts on mining and maritime security, and a pledge to push negotiations on a trade deal. Modi next heads to Australia and New Zealand. French far-right leader Marine Le Pen has been cleared to enter the 2027 presidential race after appeal judges shortened her election ban. But they upheld her conviction for misusing public funds, ordering her to wear an electronic monitoring device. Le Pen says she will lodge an appeal over the conviction to France's top court. Take a look at how European futures are trading in today's session. We had seen the euro move as the dollar continued to gain ground on that safe haven demand, with the Hormuz risk being repriced. You're seeing the euro holding at that 114 level. We've been following that political race in France. Also, of course, what's happening with European gas futures that saw the immediate shock after these renewed tensions around Iran were announced. You can see Euro Stoxx 50 futures also seeing a little bit of downside. Take a look at how Japan is also trading early in the Asia session. We had already seen a couple of sessions of losses this week, and we're now down more than 1% for the Nikkei. The yen pretty steady, still on the weak side, around that 162 against the US dollar. We know that when it comes to positioning, leverage traders the most bearish since 2007. But it's really the JGB space that we're watching closely, because we had a surprisingly strong 30-year auction, although the gains were capped on JGBs because, of course, of the fiscal risks that I just talked about. Prime Minister Takaichi's unprecedented $2.3 trillion investment roadmap for Japan's economy, due for cabinet approval later this month. But Bloomberg Opinion columnist Garode really thinks that the plan is likely to face significant resistance from proponents of fiscal discipline. He joins us now in Tokyo. And Garode, really that concern in the market is being felt across the board when it comes to JGBs trading at the moment. What will you be watching in this upcoming fight in Parliament?
I think it's going to be a very long, it's going to be a long road ahead, shall we say. This plan, that was announced last month, parts of which, go forward for cabinet approval later this month, talks about 14 years of spending through to, 2040. I think there's a lot of questions in the air over how much of that is actually going to be contributed. We don't even know, indeed, how much of that is going to come from the public sector, how much of it is going to come from the private sector. But you can see today where, there's a bit of a focus in the market about one very small wording about the government's stance towards monetary policy in the Honibudo policy that's going to be approved by cabinet later this month. There's an intense focus on that, and I think that reflects the concern that exists both in the market and also, I think, within Tokyo about spending. I think, Japan has a reputation, and in particular, Prime Minister Takaichi has a reputation for free spending. But in fact, there is a very long, ongoing battle between those who favor further spending for growth and those who favor austerity and cutting back on spending and trying to basically reduce Japan's debt. Whereas people like Prime Minister Takaichi would say that Japan should grow its way out of debt by spending. And that is a battle that's not going to be resolved anytime soon.
I was going to say, and perhaps a reason why she wants to implement more of these industrial policies, of course, it's not just Japan these days, it's across the world. We're seeing these strategic investments into AI. How well has Japan done in backing industrial winners, and what are we seeing this time around?
Well, I think if you go back a couple of decades, Japan's growth, post-war growth, was very much based on this collaboration between government and private industry. You go back into the 1970s and then the 1980s, and there was this obsession with MITI, as the Trade and Industry Ministry was known at the time. That faded, and Japan very much kind of got out of doing that kind of policy. As it basically kind of fell out of fashion, and more kind of neoliberal policies, not just in Japan but worldwide, became very much the trend. That trend has started to reverse, I think, in a lot of countries, and obviously you particularly see that in China, which is very much top-down, state-directed use of resource to build the country, to make it stronger. You see in Europe and the US now reversal of previous trends. A reversal of the idea that government should just get out of the way and let the free market do what needs to be done. And I think this is the first time that we've seen in some years Japan actually have a top-down, a comprehensive formulation for how that might look like in Japan. You talk about, winners and losers. I think the recent history of Japan picking winners is not great, shall we say. There's some notable failures in there, including companies, obviously, that should not have failed, such as, what was LP de Memory is now owned by Micron in Hiroshima and is now doing tremendously well. So that does give a little bit of concern and pause for thought over whether Japan can actually execute some of this.
Yeah, but you're right. I mean, this seems to be a global trend, right? South Korea also investing hundreds of billions of dollars of AI and semiconductors. Garode, really good to get your take. Bloomberg Opinion columnist here. Check out his latest when it comes to Japan's economic policies. This is Bloomberg. We're seeing some of these memory names across Japan and South Korea recouping some of those earlier losses. Remember, we had this tech sell-off with Samsung's record profit failing to revive the memory trade. But SK Hynix, Kioxia turning a little bit more positive. Samsung also giving back some of those earlier losses. Despite these record earnings, really the world's largest memory chip makers still have to prove that they've escaped the industry's familiar boom and bust cycles. Bloomberg Opinion columnist Shery actually thinks that these long-dated deals with customers could be the key here. Shery joins us now with more on this. Is the key word long-term agreements?
Yes, absolutely. The idea is that now that we have this memory chip shortage estimated to last until 2027 at least, the chip makers can force eager customers to sign this kind of long-term contracts to lock them into earnings 5 years down the road. And in fact, to Micron's credit, at their latest earnings call in late June, they gave quite some details and blueprints of what this kind of long-term agreements could look like. For instance, they typically last 5 years, which means that we will see revenue coming in all the way to 2030. They also have this kind of a customer prepayment. The idea is that it's kind of similar to the rental leases that many of us are familiar with, right? Like if you put in like 2 or 3 months of a deposit upfront, as the lease goes along, you are less likely to walk out, even if the market rate is much lower, because you don't want to forfeit those upfront deposits. Also, they have this kind of price bands. They have a price ceiling and a price floor, and then the actual selling price will be renegotiated perhaps quarterly or semi-annually. But there is a floor, and then Micron actually said that at this floor, it will be more profitable than its historical peak of 61%. So basically, we are going to see.
Go ahead. Yeah.
So basically, we're going to see earnings visibility all the way to the end of 2030, and that's kind of good.
Shery, we'll have to leave it there. I had plenty of questions, but we'll get you back to talk more about what's happening in China as well with CXMT's coming IPO. Bloomberg Opinion columnist here joining us with her take on what's happening in the broader markets as we also head towards that SK US listing as well. This is Bloomberg. Take a look at how sovereign bonds are trading at the moment. On a day with a big central bank decision, we have the RBNZ. The high call has become a little bit less one way. 16 of 22 economists expecting the RBNZ to hike to 2.5%, but markets pricing in about a 70% chance. We're also watching treasuries. Of course, we have plenty of auctions this week. We're talking about $100 billion plus auction cycle. We continue to watch the inflationary pressures and that again on the spotlight because of that spike in oil prices and JGBs, obviously, given that we had that 30-year auction that was surprisingly strong. Let's actually discuss with Dayeon Hong, APAC rates and FX strategist at Natixis. Dayeon, we continue to talk about the fiscal risk here in Japan. And of course, you have inflation risk as well with the oil spike. And yet we saw some upside on JGBs. What's going on?
Yeah, so we've had a very strong 30-year JGB auction yesterday. So the bid to cover ratio was highest since 2019. And this shows that there are plenty of investors, particularly coming from domestic institutional investors, that they are thinking that 30-year JGB yield above 4% is quite attractive. But what's more telling was the price action after the auction. So initially, the 30-year yield dropped by 7 basis points, rallying. But in the afternoon session, we've had the reversal of that, paying back all of the gains that had initially in the 30-year yield. So this tells us that the initial factors that had pushed the JGB yields higher, particularly at the long end, which was the fiscal sustainability concerns and weak yen feeding into high inflation, at least in the producer and import prices in Japan, have not been resolved yet. So market investors, market participants are still a bit concerned about these issues. So it is still hard to say that this is the beginning of the rally in JGBs.
And how are you factoring in the fact that we still have instability around the Iran war and we're all of a sudden seeing this spike in oil prices?
Yeah, this doesn't bode well for Japan. We're probably likely to see, if this conflict continues, then we're probably likely to see the dollar strengthen and yen will continue to weaken against dollar. And the weak yen has been the major feeder to import inflation. And eventually this will be pushing the headline inflation higher. Note that the headline inflation, which has been quite subdued, was really suppressed by the government subsidies. So it's just a matter of time where we see higher inflation feeding into Japan, and at the same time, we see very solid growth out of Japan. We saw the Tankan survey that came out last week, which showed business sentiment that held up quite solidly in the second quarter despite the conflicts, and also through the wage growth that was released yesterday, which held up high at above 3%, even though it was a little bit below the consensus expectations. But the wage growth above 3% is really not a bad number. And this will have an impact on inflation eventually and will push the BOJ to continue with its tightening cycle.
Yeah, I mean, the longest wage growth above 3% since the early 1990s, I believe. On the other side of the ocean right now, we have South Korea, and we have, again, pressure on the Korean won as well. A lot of pressure there, despite the fact that perhaps we're seeing a bit of more momentum for the broader economy because of the semiconductor exports from the country. How do you see that, given that what's interesting in the markets as well, we're seeing this divergence where foreign investors are buying Korean bonds, but they're actually selling Korean equities?
Yeah, and the selling by the foreigners of the Korean stock market has been the major driver for the weak won lately. If you dig deeper into the numbers, in the month of May, we've had close to 30 billion won selling by foreigners. And then again, in the month of June, we've had another 30 billion outflows from the Korean equities market. But we've seen a little bit of won strengthening as of late. And this has really been caused by the potential inflows and repatriation from the SK Hynix ADR offering that we're likely to see as soon as this Friday. So there was a report out on Friday. The government has been saying that potentially this dollar funding that they will do in the U.S., they will hedge it preemptively as soon as this week. So that kind of news flows has really driven the market as of late, and that's why we see dollar won currently trading even below 15.20. But I think the main driver of the dollar won movements going forward will be continue to be the equity flows by foreigners, particularly considering that the chip stocks have really been very volatile lately, so we cannot rule out further selling in those segments.
Yeah, I mean, the volatility actually also leading to perhaps a little bit more safe haven demand for the U.S. dollar, right? Especially at a time when we're seeing this downside pressure on treasuries, inflation concerns rising again. We're going to see this huge test of demand with $100 billion plus of auctions this week. What are you watching in the U.S. bond space?
Yeah, we'll see how the Fed will evolve with the new chair. But what I would be the most focused on is whether the labor market data and the wage growth coming out of there is really feeding into inflation. We have not really seen that. Well, the economy in the U.S. is quite solid, but it's not overheating. So whether the Fed will go ahead with a hike is still a question. I think the market can price at least up to 2 hikes, but whether the Fed will really move on the concerns on the inflation is another matter. And I think, you know, as the market prices in more hikes, in the eventual, then the market will price in eventual easing because it's reacting to temporary inflationary shock. And so we think there's quite a bit of value in the belly of the curve, where the front end may be pushed up on the prospects of potential Fed hikes, but then after a while, maybe 2 years down the road, the Fed may need to cut it back. And so the belly of the curve will price in that action, and it looks quite attractive from that perspective.
Dayeon Hong, really good to get your insights. APAC rates and FX strategist at Natixis. And as Dayeon was saying, we're really looking forward to any signals coming from the Federal Reserve, especially since we do have the June FOMC meeting minutes coming up very soon. Investors will be assessing the committee divisions under the new Fed Chair, Kevin Warsh. And of course, this will have implications for the broader FX space as well. We have seen the dollar gaining ground, positioning, and of course that also playing into the equity space with broadly downside pressure today, given of course the Iran tensions, not to mention the tech sell-off. This is Bloomberg. Take a look at how we're setting up for the China market opens. You can see those Hang Seng Tech Index futures now unchanged at the moment. Of course, we had that sell-off in the overnight session when it came to U.S. semiconductors. TAIEX futures also pointed to the downside. Not surprising that we are seeing the downside on those memory names as the offshore yuan right now holds steady. We have seen Chinese authorities reportedly holding meetings with top tech companies over the past month about potentially restricting overseas access to their most advanced AI models. Let's bring in our China correspondent, Min Lo. What do we know about these potential curbs that are being considered in Beijing?
Yeah, there are a number of things under consideration. One is obviously restricting overseas access to these AI models, and that sounds very similar to what the Commerce Department did to Anthropic when it comes to the Mythos and the Fable 5 model. So China is considering that. They're also considering limiting who can invest or fund these domestic AI startups, and also making any theft of these proprietary AI technology an offense under the national security law. So it seems like U.S. and China are really ramping up the security controls over these AI models. And for China, they are looking at potentially restricting access even for models that are not yet released, including both closed source and open source models. And some of the companies that were present at these meetings with the Commerce Ministry and the NDRC, which is the economic planner of China, include Alibaba, Zhipu, and ByteDance. So again, in terms of the impact for these companies, because they have made pretty strong headway globally because of how affordable their AI models are, this could be a major hit for the companies if those laws are put in place, and it could raise business costs for many companies as well.
I mean, it seems that custom silicon is now the new global trend, and we're also hearing that Zhipu DeepSeek could also be making their own chips.
That's right. They are joining a number of other Chinese companies, including ByteDance, Alibaba, Baidu, to make their own chips, because many of these AI companies have matured. They are not really aggressively building new models now. They are really ramping up the usage of their existing models, because token usage has gone up tremendously for a company like Zhipu. So instead of relying on these general purpose GPUs, they now want to use the cheaper and more energy efficient inference chips that would tremendously lower their costs, especially if they get tailor-made ones that integrate well into their hardware system. It would increase efficiency, make things run incredibly faster. And so many companies, including Zhipu and DeepSeek, that's according to the information and Reuters reporting, they are also looking to create their own tailored inference chips. And of course, one of the big catalysts is the US export control that restricts some of these access to the advanced chips from NVIDIA. And one of the implications here is that analysts are saying that for NVIDIA, the more these Chinese companies shift away from NVIDIA's chips, it might become structurally harder for NVIDIA to recover that market share in China, even if these export controls are rolled back eventually.
Bloomberg China correspondent Mingmin Lo, as we're setting up for the China market opens, we have seen, of course, that global semiconductor sell-off, and this at a time when we continue to watch those domestic Chinese AI names like Mingmin just was talking about. Let's actually bring back Anthony Stevens in Hong Kong. Anthony, I'm a little bit confused about this tech rotation, especially because China is such an idiosyncratic story, right? Just a few days ago, people were saying, you know what, don't look at Chinese internet names anymore. Those are the old Chinese tech names. The economy is not doing very well. But at the same time, now you have this downside pressure on hardware globally.
Yeah, so it's nice timing for the Chinese, this semiconductor sell-off, because the Chinese internet ecosystem is on the opposite side of that trade from a flow perspective. It's the big Asia underweight. You know, Tencent, Alibaba, these names have fallen out of favor, Meituan most dramatically. And then into that kind of overextended positioning, you had a change in fundamentals with the Chinese internet companies releasing these quite good frontier LLMs. So the first was Meituan and followed by Tencent. These are 1 million context kind of models, so at the top of the line, and they've rallied quite sharply on the back of that. So now we enter a very interesting moment in the market with the semiconductor space under pressure, most notably in Japan, even though Korea is quite volatile this morning, as a pretty decent setup for Hong Kong to outperform. So that was the overnight lead. But into that, we continue to have this regulatory headache and overhang in China. Nobody really knows what the Chinese regulator intends to do with AI on a forward basis. I think the success of the open source market has been a clear kind of win for China, but how much China loves that trend to continue is a key point of question. Now, on the other side, you do have flow turning in China, and in Hong Kong in particular, you have IPOs coming thick and fast in the technology space, most notably Luxshare and the Chinese memory play CXMT, which is obviously coming at a pretty volatile time in the memory sentiment of the market.
Right.
So you have these IPOs that need to be processed, and that's going to be very important for the Chinese market.
Tell us a little bit more about those IPOs, because Hong Kong has really lagged global peers. Could that give it another sort of boost for this market?
Definitely from the appetite that seems to be there for the Hong Kong IPO market. It is a completely separate tech ecosystem, and investors do look like they want to hedge their bets. And this new crop of companies, some of them have a pretty decent track record in the A-share market, like Lakshare. CXMT is a new player in terms of being listed on markets, but they are obviously an established part of the Chinese semi-ecosystem. So these are companies people want to be playing. Also, it's important to mention that big lockups are coming back into the market from Jipu and Minimax, and how well those trade will be a very good indicator of how much belief people have in Chinese AI models. Jipu, it was very interesting to hear that the funds that took down the lockup are mostly domestic funds, and they have been telling Chinese media that they intend to hang on to the funds. So it'll be very interesting to see how Jipu trades today. In terms of the forward-looking IPO calendar, according to all reporting, it does look like Hong Kong is set for a very busy year of IPOs.
Bloomberg Markets reporter Anthony Stevens, as we hone in one of those stocks, Chinese autonomous driving company Momenta Global, set to begin trading in Hong Kong today after a $752 million IPO. The debut will test investor appetite for loss-making firms with promise in technology. Chief North Asia correspondent Steve Van Engel joins us now from the Hong Kong Exchange. Steve, this debut coming at a time when we have broad downside pressure on tech. What are we expecting today?
Well, we're expecting at least 5 companies. Actually, there are 5 gongs lined up on stage here at the Hong Kong Exchange waiting for their debuts here today, including Momenta Global. It follows in the footsteps of Pony AI and also WeRide as self-driving companies from China to tap the capital markets and fundraising here in Hong Kong. It's also the second so-called red chip to list so far this year, using and employing that offshore structure, which there had been a bit of a crackdown by regulators in Beijing towards red chips listing in Hong Kong, but this will be the second one. They provide essentially advanced driver assistance technology to some of the world's largest automakers and some of the world's largest legacy car makers, like Toyota, like Mercedes, like General Motors is a backer of Momenta, also the biggest EV maker in China, BYD. And that's where their biggest surge in revenue in 2025, which was up 82% year over year, but they're still loss-making. So the big question is, are they going to continue going forward being mostly a technology provider to these big legacy car makers who have found the R&D capex spending on advanced driverless technologies to be quite high, and they're going to continue to outsource this technology to a company like Momenta? Or is Momenta really going to go full steam ahead into operating its own fleet of capital-intensive and asset-heavy robotaxi fleets? They are developing that with the likes of SAIC in China. They're doing trials with Uber in Germany, with its partner Mercedes in the UAE. There's talk that maybe they're going to be partnering up with Grab in Singapore. So again, later this morning, after the ringing of the gongs, we are going to be talking to the CEO, chairman, and founder of Momenta Global to find out exactly where he's going to head the company.
China has been at the forefront when it comes to autonomous driving, right, Steve? But at the same time, does that mean more competition for companies like Momenta? And what do they want to do with the proceeds here in order to get ahead?
Yeah, well, already according to the prospectus, about 40% of the proceeds on this $750 million IPO are going to be going into AI compute. So again, this is sort of an AI adjacent company. In fact, one fund manager was saying Momenta is sort of less than a robotaxi company and more like the autonomous, or excuse me, the Android platform of the driverless technology in China. So we'll have to kind of get more clarification from the chairman Cao coming up in this interview. But yes, there's tons of competition. Obviously, Tesla wants to get into the China market and get full approval for full self-driving and FSD. But the one to really look out for in this space is a company like Huawei. They have rolled out a suite of technologies for the automobile. They have their Harmony OS for automobiles. And so that's obviously a big competitor. So there's no shortage of competition in China in many spaces, including, of course, autonomous driving.
Stephen Engel, Bloomberg's chief North Asia correspondent. Steve, we'll be looking forward to that conversation exclusive with Momenta's founder, chairperson, and CEO Sao Shudong. Stay tuned for that conversation on the China Show. We have more ahead. This is Bloomberg. The top corporate stories that we're tracking, Bloomberg's being told that peak demand for Amazon's latest $25 billion bond offering reached $62 billion. That's about half the orders it attracted for an offering back in March. A potential signal of investor fatigue around the AI-linked debt sales. This latest deal brings Amazon's total bond issuance over the past year to more than $100 billion. SpaceX AI and Cursor reportedly plan to launch their first jointly developed AI model as soon as Wednesday. Tech news outlet The Information saying that the model is expected to process information quickly enough to compete with products from Anthropic and OpenAI. It also reports the companies pushed back plans to launch the new model earlier this week in order to improve its efficiency. Of course, we're watching that SpaceX debut in the NASDAQ 100, and it stumbled. We're talking about the lowest price for SpaceX since it IPO'd. And it really didn't help that we had that broad tech sell-off, right? That's being felt across Asia as well. We had the Philadelphia Semiconductor Index, for example, losing more than 4%. We have seen a little bit of a rebound when it comes to names like SK Hynix, even Samsung clawing back some of those earlier losses. So we have the Kospi now regaining some ground, up 1% after 2 sessions of losses already for the South Korean market. The Nikkei holding pretty flat as we're seeing the NASDAQ 100 futures also gaining a little bit of ground. Of course, it's all about that rotation theme as well, perhaps away from those tech names into some of those laggards. But take a look at how Australia is trading, because that also tells you what the sentiment is right now when it comes to oil prices. Because we are seeing the big energy producers in the ASX 200 leading those gains, despite the fact that the broader market is down more than 1%. You can see Brent and WTI prices above that $70 a barrel, recouping some of those losses that we saw in the second quarter for oil that has sunk more than 30% in the second quarter. We were talking about an oil glut. We're now again talking about geopolitical risk premiums at a time when we're still trying to digest what's happening really around Iran with the U.S. launching airstrikes again. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China Show is next. This is Bloomberg.